Thank
Okay.
thank you all for for joining us today for our conversation with Crister Fritzson, CEO of Net Insight. So a little background on me and my fund. My fund is called Cobia Capital. We've been around since 2008. We are a long short equity fund focused on the small cap technology sector with a value approach. We invest in the US and Canada and Western Europe, and we've oftentimes found some very interesting companies in Western Europe because a lot of tech investors don't really focus on that geography. So we'll be able to find sort of great companies at real discount prices. So before we kind of get into it, I just want to give some kind of valuation metrics, and so you see at least sort of how cheap the stock is before we go into the details. So the company has about $120 million market cap, US, about 22 million in net cash on the balance sheet. The company is, sort of regularly bought back its shares in the market. On my 2026 numbers, the company trades at an EV to revenue multiple of about 1.4 times, about 12 times earnings. So it's very cheap. And the way I look at it is I think it's sort of cheap on its core media transport business, and you get free call on its newer 5G synchronization business, which I think could be pretty explosive business over time. So as I said, we're joined here by Crister Fritzson. And maybe Crister, just to start out, you could give a little biography on yourself and how you ended up at Net Insight.
Okay, thank you, Jeff. Hello, everyone. I'm based in Stockholm, so time in Stockholm is like 5 o'clock in the afternoon. I joined Net Insights 2020, and I've been at the board for like 6 years before that. So my background is focused on telecom. So since mid and 80s, I started in the telecom sector, actually in Motorola, the American company Motorola. I spent like 15 years with Motorola in the telecom sector, focused in Europe, Nordic, all the way from responsible for Nordic area, channel manager for Europe, marketing manager for Europe. And then I moved over to media sector and joined a pay TV operator in Sweden, actually, that were focused on the DTT, the terrestrial network. So we were a very successful pay TV operator, become actually the largest operator in the Nordic area. So that was a great journey that we had. And then I moved to the group company, Telecom. It's a media telecom service provider in the Nordic region. They had the full majority share of the boxer, the telecom or the pay TV operator. And actually 2008, I signed a contract with Net Insight as the CEO of Telecom. So Telecom used the Net Insight product for the terrestrial network and the media offering that they had. So I've been very familiar with Net Insight all the way back to 2008, actually. And then I spent like 8 years with the CEO of the train operator in Sweden. And then I would like to go back to media and telecom, and that's the perfect solution for me to be at Net Insight, because we have a strong left hand, which is the media, and we have the telecom on the sync side, as you mentioned, Jeff. So it's a perfect solution, and I'm much closer to the business and the customer that I love. So I'm at a good spot right now with Net Insight.
Terrific. Maybe you could start out talking about the media transport business, what types of products you have, what customers look like, the competition in the space, and why you guys win.
Yeah. I mean, we have been in the media transport business for like 27, 28 years. So we are very, very well established in that segment. And what we are actually doing is focus on live sports or live event. and primarily sports event. And you can imagine all the sports event globally, because we have a global footprint. So we have like an office in Stockholm, US, London, and in Asia as well. And we are operating more than, I think we are in 70 or 80 countries that we are operating in. So what we are doing actually is that transport all live sport, regional or globally, with our equipment. And our customer is like broadcaster, of course. We have service provider, with regional and global service provider. We have production companies, and we have rights holders. So a little bit on the broadcaster, these all the big broadcasters in US and Europe and Asia. We have more than like 500 direct customer that we are supporting. Or we look in the service providers, can be the largest service provider within media is Tata Telecom, the Indian company. And they're also one of our largest customer. Production company can be like NEP and others local. NEP is a global production company, and then we have local or regional production company as well. And then we have like content owners, and it can be NHL, NBA. In Sweden is SHL, that's the hockey league in Sweden. We have the hockey league in Denmark and so on. So we have a number of large customer globally. I mean, we have been in the winter and summer sports since 2008. So that's one of our, that's the Olympic that we are supporting. So what we are actually doing is transport a live from, like, it can be from an like event, a venue or a stadium to central production hub, and then from the production hub to like a pay TV operator, and then to the broadcaster. So we are in that type of distribution of the live event. So we have specific product that help our customer to produce that, and we have a number of different trends that really are giving us a strong growth in the market that we have been investing into in like 3-4 years now in the growth pocket in the market.
Yeah, maybe you could talk about, you know, how it was done before via satellite and sort of the way you guys are taking share, you know, from satellite.
Yeah, I mean, we have a number of trends within the media business. One trend is, as Jeff was saying, that I mean, normally you use the satellite to transport sport, even live sport. You have like an OB van outside this arena. But today you have more remote production, and you're not using satellite. So most of the venues or stadiums globally is becoming like have fiber access, which means that they can use our product installed into the stadium that take all the camera feeds. I mean, in large event, you can have like 50, hundreds camera, and we are taking all the feeds from the camera and transport it over to the central production facility. And that's something that really are driving more investment into our product, the remote production and moving from satellite. The other trends that we have been investing heavily into is we are moving more and more over to IP, standardized IP transport for media. And we have like invested into 2020 into that and been taking market share based on the investment that we have done. But that means that the customer need to reinvest in the hardware product that they have and moving over to IP, because you would like to have from the studio to the customer, you will have a IP-based workflow. So all the product in that chain need to be IP. So that's definitely a driver for us. So we have a number of different drivers in the market that we are investing into. Cloud is another part that is important for us, that we see that more and more live sports is now coming into the broadcaster to be broadcasted. And one driver is that you can use cloud which is much more flexible, lower cost. So we see tier 2 and tier 3 sports coming in to be live as well. So and we have been very focused on that for many years. We actually divested a product to Amazon called Side that was fully a cloud-based product. So we have been into cloud for the last like 7-8 years, and we are really taking the advantage of be very skilled in cloud development and cloud production and cloud using cloud as a transport for live events. So that's definitely a growth part in our portfolio that we are looking into, and that also give us recurring revenue, because that's the way that we are doing with the cloud. It is recurring monthly based on streams, and you more you use it, that the recurring revenue is going up for us. So that's something that we're focusing on to get more recurring revenue. So I think that was a number of drivers that we have in the media industry, and we have been very good at finding those growth pockets within the market. So we have had a steady growth the last 3 to 4 years.
Who are the main competitors, in the media transport business, and how do you compete against them?
I mean, we have a number of different competitors. I mean, the largest competitor within our market is called Evertz. It's a Canadian company. But then we have a number of regional competitors. So, and we are among the 5 biggest players in this market segments or product segments. So what we are known for is if you should have a product that cannot fail, use Net Insight products, and that's the reason why we get the orders from the large events globally, and they trust our product, and we have been in the market so many years. So we have actually a premium on our product because they are really robust and high reliability. So that's something it's key for us. But we're also driving, because you have more remote production, which needs capacity, but you also high quality on we're going towards a high definition, full HD. That drives also investment in our products, and we are actually leading that. So we have we were first out with a 100 gig platform. Our major product 1060. It's our high selling product at the moment. But we're also planning to launch and investing in the 400 gig platform that will come out in the end of this year, beginning of next year, so that we will be the first with the 400 gig platform for media transport. And that's really important for us to drive that, because our customer need more capacity, more content, more high quality, more content that needs to be delivered. So that's a key for us to drive that capacity increase in our products.
How fast do you think the media transport market is growing, and how fast are you guys growing within that?
We think that the market is growing around 3 to 4%, and if we look at the CAGR for the last 3 years, we had a growth of 12%. So we are definitely taking market share, and with our new product we are coming out with, we are taking market shares. And we have been able to, even though that we are growing very rapidly on the media side, we have been able to keep the gross margin, because our business is really, we have a high gross margin. We have a gross margin over 70%. So the aim for us is actually to grow. So we investing to find growth in the market. We have a global footprint. We are selling to the big major customer within these segments. And with a gross margin of 70%, we can really scale our business. So growth is really important for us. We are doing that through investment, but we also now looking into M&A, to acquisition, to broaden our portfolio with the strong balance sheet that we have. And we are moving into looking into potential acquisition going forward.
Got it. Is maybe talk a little bit about your projected operating model. Where do you think, operating margins can go over time?
Yeah, I mean, we go back a few years, the majority of our sales for CapEx, but we are moving over more and more to OpEx, that we have more cloud. It's definitely something that drives OpEx and drives the recurring revenue. And license fee, I mean, is normally bill of material. If a customer were buying product from us, it's 50% hardware and 50% software. And that drives, of course, license and support based on that. So that drives our recurring revenue. So we're more and more moving over to software-based products.
I guess the last couple quarters in the media transport business has been lower than I guess it had been previously, and that contributed to the stock coming down and creating what we see as a pretty compelling opportunity here. So maybe just talk a little bit about the past couple quarters and kind of, what you guys see.
I mean, based on the installed product that we have, is a huge number of installed product, and our business model is actually based to have this rack that we have into a stadium or as the broadcaster. So we would like to keep the rack or the rack within at the customer. Do you understand rack, Jeff? Do you think that everyone understand when I say rack?
No, maybe you can explain that.
It is, I mean, rack is installed into like a stadium or at the broadcaster. And based on that, you install cards with software. You added software into that. So our key is to keep the rack that is installed into the broadcaster or in the stadium, and we are just upgrading with new software. So actually, the product that we have the absolutely large installment is the 600. It has been the same rack base unit since 2008. But we are upgrading with software. Our product is very sticky. So the customer love our product because they don't need to do the installment again, which is very costly for them. And based on that, we can keep the customer for a very, very long time. So like Tata have been customer to us since, I think, 15 years or something like that, and they have a huge global network. And they are upgrading with new functions, feature, and capacity in the installment that they already have done, which means that normally we have a very solid sales to existing customer. What we saw, as you mentioned, as we saw in Q4, we saw a little bit softer market in Europe and softer market in APAC, but still a strong growth in America. So America is the market that we see huge potential to grab market share. And so we are focused on increasing sales in America. But in Q1 then that you mentioned that we have a little bit of a hiccup in the sales, in the revenue. We saw lower sales in Europe and APAC, but still a strong sales in our growth market, America. So the market in America growth is 40%, but we dropped in sales compared with Q1 last year. But we see that the activity in the market is very strong. We don't see that we see that the market is coming back in Q2 and the rest of the year, in the second half of this year. And a good indicator was like the NAB in Las Vegas, the big show in Las Vegas that we had in March, that we have more visitors and booked meetings than last year. So the activity level in the market is very strong. So we see that was a hiccup in Q1, but we will catch up in Q2 and the rest of the year.
Okay, and now so that's a media transport business. Sounds like a great growth, platform for you guys. So maybe let's switch gears and talk about the 5G synchronization. Maybe
Yeah.
you can talk about like as an outgrowth of the media, the technology outgrowth of the media business, and then
Yeah.
kind of who you're addressing here.
Yeah, I mean, time is crucial for media, because if you have live sports, you need to have control over the transport of the content within the network. So we are very focused on timing and time synchronization. But we also have, since 2008, or in the mid 2000, we were having a number of terrestrial network, as a DDT, TV terrestrial network. It's huge in Europe. You have that in US as well, but it's not that used because you have more cable. But in Europe, in each country, you have a terrestrial network, TV network, and TV networks need to be synchronized through time. Normally, 4G or 3G network is synchronized through the frequency. But so we have been using a technology that we can transport time over a network since 2008. And when the 5G were coming out, it's also synchronized through time. So time is crucial for a 5G network. The uplink and downlink need to be synchronized. Otherwise, the network will go down, and they can also disturb other operator in the same region. So time is really crucial for a 5G network. And we see that the issue with time is that it's coming from for GNSS or GPS, the satellites. So maybe normally you think that time is actually on a satellite that is flying around the globe. But that's the case. So time coming from GPS, but GPS is a very vulnerable technology, because it can easily get jammed. And as we see right now in the world that we have, like in Europe, we have the war in Ukraine and other things. So normally we see in Europe that the GPS gets jammed, and that will disturb the 5G network. So we see now that the regulatory bodies starting to see that you cannot use the GPS for time synchronization. And as 5G becoming a critical network, you will use that like in industry and other areas that are very critical for society. So like in Sweden, have determined that the 5G operator cannot use GPS as the only source for timing. And that's where we are coming into. We have a unique solution that we haven't seen in the market earlier. We haven't seen it, and we don't see any similar technology as we have. So we are offering time synchronization through the network, so you are GPS independent, fully GPS independent. So even if you lose the contact with the satellite, you have time in your network. So many we have seen in Sweden, so they have determined for a license holder for the 5G, they need to have an alternative. So we have shipped the product to 2 out of 4 operators in Sweden. We see that in US, the FCC is saying the same. They are looking into an alternative to GPS. We say the UK, we see EU are doing the same, India doing the same. So it needs to be an alternative for time synchronization for 5G network. And we have a very strong alternative to GPS. And we see traction on that. And we launched our product for 5G last year, Q2 last year. And we get traction on that product into the market. That is not the only segment that we see. Timing will come into power grid. Companies need also timing because they are moving over to IP-based or digital. and they need also timing. We see like fintech, we see in the media industry definitely need timing, and they all need to have secure, reliable timing for, because I mean, a power grid company is also a critical network. The media is also a critical network. So we see traction of our product right now, and we see a tremendous opportunity in time synchronization for 5G that we're focusing on, but also in other industries.
How big do you think the market could be for for timing products?
You mean the global market or the global market?
The global market, yeah.
I mean, it's a little bit hard to say exactly, but it's probably $4 to $5 billion market. So it's enormous big.
So
it's
no, I was just gonna say, compared to your market cap, it seems like a pretty big opportunity.
Right, it's a tremendous. The market for synchronization is much bigger than the media market, definitely. And we have a new product.
So you mentioned GPS as being kind of a timing source. I know there's another one, PTP. Maybe you could talk about that. Kind of.
Yeah, I mean the alternative. I mean it is an alternative to GPS. Instead, the full PTT it's called hardware-based PTP. So what the operator need to do is fully upgrade the network with new equipment, because you need to upgrade your full network with to get PTP. Every line card, that's what's the name. It's called its line card, and every line card within the network need to be PTP ready. If you have one line card is not PTP ready, it will not transport the time within the network, which means that it's an enormous investment for an operator to upgrade the full network with new equipment. So that's one issue that we see. The other issue that we see is very complex, because it's not just one supplier that they give you the PTP. Normally you have 3 to 4 suppliers. It's not just Ericsson or Nokia. It's going to be Cisco or other vendors that are you have as a vendor to an operator. So you need, all vendors need to be PTP ready. So it's very complex for an operator to operate the network with 3 to 4 management systems. So if you get into a problem with the time synchronization, it's very hard for them to see where is the issue in the network. So we are offering one fully time synchronization network. The other thing that we definitely see, like in US and other market, is that many operators have leased line. They have leased capacity from other service provider or other operators. So with the PTP, you cannot use the lease line, because you need to, with the PTP, you need to have hardware in both ends, and you don't have that if you have lease line. We are agnostic. We can handle lease line, we can handle fiber, any underlying network we can handle with our product. So that's take down the investment for the customer board, CapEx and OpEx, but it's also give them a much easier way of handling the time synchronization. If they need to upgrade the network, it's very easy to handle if you have one time synchronization network instead that you have 3 to 4 suppliers that you need to have control of. So we have a number of very important key features within our product that really give us a strong position in the market.
Maybe you talk a little bit about your deal with Turk Telecom, how that started and how that's progressing so far.
Yeah, I mean, we signed a agreement with Turk Telecom. It actually started in Turkey, because when Russia started to attack Syria, they switched off the GPS in that region. And as you know, the Turkey is in between Russia and Syria, so they switched off the GPS for 1 month. And at that time, Turk Telecom started to test out the 5G network, and they realized that we cannot depend on like GPS timing for our network, because that will happen in the future as we are right now. And they know that we had this solution in the media market. So we start to talk, and they ask us if we could develop that into 5G. And we start a cooperation together with Turk Telecom. They have high knowledge of 5G, and we have a high knowledge on transport time within the network. So we signed an agreement with Turk Telecom worth $25 million. One part was an NRE fee of $5 million, support for the development of the product, and the other part was an pre-order on the product. So we have been shipping product to Turk Telecom, and we expect that they will accelerate the rollout of the network in the end of this year, beginning of next year, because they will receive the license hopefully this year. So we still have an order book for 150 million Swedish kronor, which is approximately $16 million worth on this product. And the majority of that is Turk Telecom. So that will, the order book, is ended in 2027, then they need to take out the product that they have on the order book.
Maybe talk a little bit about the sales cycle with the telcos, proof of concept, commercial orders, like how does that look?
And maybe have 15 commercial contracts on the Syntai, a number of operators you can see like in Nordic and Turk Telecom and others. So it normally starts with POC that in the lab. That's the normal way that the telecom operators start to do a test in the lab, and to see that how the product working and get to know the product. And then you have like a network trial out in the network. It can be all from 4 to like 10 sites that they test to get an understanding of the product in the live network. So it's a number of different stages that you go through until you come into the final order or contract with an operator. Then they need to do like the network planning. And then they need to have budget because that's an investment that they are doing in the network, and then they start to roll out. And the rollout will probably, as with Turk Telecom, if they started this year and be ready with 2027. So it's a few years until they do the first rollout in the network. You're not building a network for it take time. It needs to be installed out in the networks. It needs to be thoroughly planned, and then take time because you need to have people out in the field at the tower of in the network to install it.
I see. I guess you start with Turk Telecom, and you see with all your new commercial deals, like each one layers on to the previous one. So so sync revenue is going to grow. When do you think that sync revenue is going to start to accelerate and become sort of a larger part of the business?
And then we see that, as you're saying, that we are signing more contracts and they are planning to roll out. We see in the second half of this year, we see that the revenue will increase. So with the rollout, it takes time for the operator to do the planning. And we have communicated the number of the contract that we have signed with the operating, given the name of the operator. But the problem of they're not allowed us to communicate the name of the operator they were signing. We have Telecom, we have 3, we have Turk Telecom. So a few of them have allowed us to communicate the operator's name, but most of them are saying that you're not allowed to communicate that you have signed a contract or have shipped product to us. You're not allowed to do that.
Right.
So yes, it was a question that was coming up, so I thought that I was taking that immediately.
Got it. What do you see so you have some deals in Europe that you've announced. What do you see in kind of the US and Canada, the potential there? Maybe like if you land the T-Mobile, like how big could that be for you guys?
You can see like Turk Telecom is worth like $220 million. and then you can compare with the other operators, and Turk Telecom is quite substantial, is quite big operator, but not in the same as the 10 or 20 biggest operating in the world, but they are big. So that's if you go for full install our product in all the way out to the sites, then it's a huge investment. But you can also do it in the core and then gradually install it further out into the networks. It's a little bit depending how you design your network and what type of network that you have. But the interesting thing is that we have, as we have been communicated, is that the last 6 to 12 months we have seen larger operator interesting in our product, and it was a little bit when we do the pre-study on this market, we didn't see that the incumbent, that the large the operator number one in each country or each region should not invest in our product, because they have the resources of upgrading fully the network. They have very often full fiber connection to the sites. So they is not the customer that we were focusing on from the beginning, but we have seen like the last 6 to 12 months that they have started to get interested into our product, and that is actually coming from it is very complex to have full PTP, as I mentioned earlier, with 3 to 4 vendors, and they see when they're upgrading the networks, they are losing the time synchronization in the region, and they are very hard really to monitor that. So we have seen that the complex situation with PTP drives also interest into our products. So we've been a little bit surprised. We didn't see that from the beginning. We didn't see that in our pre-study that the number one operator in the region or in the country should be interesting in our product. It was most number 2 or 3 that should be more interesting, because they don't have the full heterogeneous network, and they have less fiber, and they have more leased lines. So that's the focus that we should have. So we target like 50 operators from the beginning. So this is the key customer that we can see that will be extremely interesting in our product. So we have been a little bit surprised that they're coming and saying, okay, we are interested into your product, and we see that it's increasing the last 6 to 12 months, that the larger operator get interesting into our product, and it's very positive for us, of course.
What about you guys are working sort of ITU standardization of your technology? Maybe like just describe what the ITU does and how that's going so far.
Yeah, I mean, within the GSM, it's standardization. To have a common standardization is very important, and it's been all the way from the start of GSM. That's the way that they are driving it, that they get standards, and it's this ITU called. They are doing standardized product, or not product, but standardized features into the telecom market. So we have been into that for a little bit more than a year. So we expect to get our technology standardized in end of this year, beginning of next year. So that will be like a proof of our product and technology within the 5G or the telecom environment. It's important to get that approval or that standard stamp on our product.
Do you think customers are waiting for you to get the full ITU standard, or they see the process and they're willing
to see the process? And we have last summer we had the first item approved, so we are like in the way of doing that, and in the team that are doing that, or in the group are doing that, I mean the secretary is a guy from Ericsson. We know that other vendors and operators also into that. So that's an important part of that. But I think the most important is that we have started this process. But of course, when it gets standard, it will be well communicated into the telecom market, and that will give us an extra push, I think.
What do you think, like, if you look out a few years, do you think that Net Insight will still be a standalone company? Or, I mean, it seems like your technology is pretty robust, so maybe one of the larger telecom equipment providers would want to buy you guys?
I mean, we are for sale every day of the year. So, I mean, of course, someone can buy us. I mean, we have a very strong position in the media industry and been there for many, many years with very strong business. But I mean, this new product that we have launched into a new, very, very large market with huge potential that, of course, drive attention to our product. And we have been into so many different operators and testing our products. So I think around our competitor and colleagues, they are very well aware of our products.
Okay. Maybe Chris has been very good overview. Maybe we could open it up to some questions that the people might have in the audience.
Or have you missed anything, do you think, Jeff?
No, I think it's a very good overview. Listen, I encourage people to follow up with you, if they have additional questions. But maybe, in the meantime, like if people could sort of type in questions you might have for Crister.
Do you think it's something have been unclear in the now we see? Yeah. Did everyone see the question, Jeff? I think so. Should I answer? Yeah. No, I mean, I think as I mentioned, we have an order book of 50 million or 60 million dollar. So that's one indicator that's in interest in the market, and we have shipped now the Syntype product. I think that we have more than 1,000 units out in the market of the Syntype product. So that give you like an indication. It's nothing that we just talking about. We have network up running with our product, which are live. So that's I think is a strong testimony on our product. But going forward, I don't think the order book will be that important. It's more the revenue. And as we mentioned earlier, I mean, we don't see that a customer, telecom operator will pull in an order for $10 million or $5 million. That they will gradually roll out the product over a few years. That's what we will see. You build like a core, and then you continues to build out the network. I mean, one indicator is actually we have a operator in Sweden called 3. It's the fourth operator in Sweden. So it's fairly small operator in a small country like Sweden. We signed a frame agreement with them worth $3 million. So that's also an indication of the volume you can see from an operator. And so they are constantly buying from us quarter by quarter and building out the network. So they did it like in the first little bit bigger purchase from us to build a core, and now they are building out the network around the core.
Right.
Do
you think Turk Telecom could get bigger than the initial order that they gave to you guys?
I mean, they gave us a substantial order, of course, but going forward, I think that it's potential to get even more revenue coming from Turk Telecom, definitely.
Yeah. Okay. Well, I forgot to mention actually that Crister, you're a big shareholder as well. You own, was it 5% of the stock? Is that?
Yeah, I mean, I still have 2% of Net Insight, so I'm still a fairly large. I'm on the top 10 list, I think, or top 5 list. So yes, I think that's an important part of. I saw immediately when I mean, the reason why I'm coming into Net Insight, I saw that they have a very, very strong technology portfolio. They have an R&D that are outstanding, but I saw that we had a huge potential to build out the front end to be more commercialized and really get more focus on delivering the product into the market and growing. So the key that we have is to like take a new customer. So I mean, if you go back a little bit with the new product and building out the front end, we really have a strong growth of new customers. So that's one of the key that we are actually focusing on. So I think last year, of the all over revenue that we had last year, close to 15% were coming from new customer. And if you go back to 2022, revenue from new customer was 1%. 2023 was 4%. Last year it was 15%. So that's like also like a testimonial and really giving the message that our product that we have developed the last 2 to 3 years is really strong, because we are increasing number of new customer and they are taking quite a substantial share of the revenue actually. So last year was, and we are graded, we are saying like 11 new customer last year, but that was revenue above $100,000. So we had, of course, more customers. So we see that the customer that do a little bit more substantial investment first year, they become a recurring revenue coming back year after year. So that's the reason why we are tracking them very carefully, and we have a full focus on customer that do the first little bit larger investment, and we know that they will come back like next year.
Yeah. Okay. Does anyone else have a question? I guess, you can ask questions now, or I'd encourage you to follow up with Crister himself for more detail.
Should I pick some of the?
Sure.
I don't know where should I start. Should I start from the? Yes, I was selling off some share in the beginning of this year. Was it? No, it was last year I was doing that. Yeah, last year, and that because that I actually were taking a loan, so I need to pay back the money that I have loaned, so I need to sell some of the shares. So that was a very simple way of doing it. So this was the only way that I could do it. So I needed to I had finances through a loan.
Gotcha.
I need to read the question.
Yeah. Anyone else have any question? Okay. So Crister, thanks so much for taking the time today. I mean, I think this is a really good overview of both sides of the business. And as I said before, I mean, net insight is one of my biggest positions personally in the fund I'm in. And yeah, but if you do have any additional questions, please feel free to reach out to Crister with them.
And yeah, if you have been close to us, you have visited us in Stockholm, and you have been visited on the exhibition, so you have been thoroughly following us and do the audit on the company. So I'm grateful for that. So yes, I mean it's a great opportunity, and we had a hiccup on the stock price, but it's a good opportunity to look into Net Insight and see if you're interested to invest.
Terrific.